excited to be with you today. Thank you so much for taking time out of your busy schedules to join me to talk about due diligence. It's one of my favorite topics. I know it's probably the biggest thing that entrepreneurs fear, but my hope is that by walking you through this today, you'll have a little bit better orientation, we'll demystify some of the things, and actually have you start to enjoy due diligence as much as I do. I know that sounds strange, but it's actually, it can be fun. It really can, I promise you. So before I wanted to walk you through, I'm a recovering type A, so I want to tell you what this journey is going to be so you have a little bit of orientation of what we're going to cover. Because of the amount of time, I normally do this in a 2 or 3 hour session. So we're actually going to be doing the introductions in the chat. So as Christine invited you all, please make sure you put in your name, your business, a little bit about what it does, and drop your social media handles so we can hit you up on social media as well. This is being recorded, so we'll be able to each look back on this video and be able to talk through or follow up with people that we see represented in the chat. But I'm going to tell you a little bit about Social Impact Strategies Group and very quickly about what we do. And then we'll really get into the due diligence process. What is it? How long does it take? Why it's important, and then I'm going to actually walk you through the checklist. Like I said, because we only have an hour, we probably won't get into a breakout interactive component, but we will provide you with a robust Q&A. So start getting your questions ready. We'll probably hold the questions till the end because I might answer your questions in the moment. But if it's something that's really top of mind, I'll try to stay away from jargon and make it simple and easy to digest so you can understand what's going on. So with that, let's get this show on the road. Welcome, everybody. I am your host, Elaine Rasmussen. I am the CEO of Social Impact Strategies Group, and I am also the founder and producer of the ConnectUp Institute and the ConnectUp Summit. So a little bit more about both of our organizations. ConnectUp is our nonprofit. We provide workshops, trainings, one-on-one advising, CEO circles, and like I mentioned, our annual ConnectUp conference, which, by the way, was 2 days before the shutdown in 2020. We are anticipating ramping up for ConnectUp this year. We're just trying to figure out what that looks like. So if you've got some ideas of what you would like to see, please let us know. On our for-profit side, we are a certified B Corp. We are a consulting and firm that provides facilitation as well as expert knowledge on racial equity, social impact, particularly as it relates to design and implementation and corporate responsibility and inclusive economic development. So now we've got all of that out of the way, we're really going to get into the why you're here. If you've got burning questions around due diligence, please put those in the chat so I can be mindful to try to address those through the presentation. But definitely, like I said, we'll have a Q&A session at the end. So what is due diligence? These are two words that aren't necessarily in our common everyday speaking to one another or friends and family. So what is it? So due diligence serves two sides of the same coin. On the entrepreneur side, it's really about demonstrating that you have some growth potential and what are the things that you have in place that will help secure that potential for growth. And then on the investor side, it's really to demonstrate, is this part of your investment strategy? What are the things that you need to make sure that this investment is actually in alignment with the portfolio that you're trying to build, even if it's your first investment? What are the things that assumptions that you're bringing in so that you can start to push and pull on those assumptions as you go through the due diligence process on your side? I like to think about due diligence in 3 steps. I won't call them easy steps, but I will call them steps. The first is a due diligence screening. And usually with the due diligence screening, and let me see if I can just move my thing here because it's in the way. The due diligence screening is really more informal. You a lot of times don't even know that it's happening. It's really a preliminary overview of what your organization is, what your business or your nonprofit is. It could happen more in a public arena, but many times it's under the radar. And that due diligence screening can last up to 5 years. I remember I was in year 3 of my business and I happened to meet Nancy Lyons. And if you don't know who Nancy Lyons is, big, huge small business person in our ecosystem, an amazing human being. And when I met her for the first time, she's like, "Oh yeah, I've been watching you." And I was like, "Excuse me?" I didn't know how to feel about And I was like, what do you mean you've been watching me? But she's been paying attention, as articles get written about me in the Star Tribune, or as I attend events or I'm speaking, people are watching, and you don't know that they're watching. They're trying to get understanding of where you're trying to go, what are the mission, values, and purpose of your organization, whether you're a nonprofit or a for-profit or a social enterprise. But it's really that behind the scenes of like, hey, I want to see if I even want to be associated with this person or this business. Oopsies. The second step in the due diligence process is really the actual business due diligence. This is when somebody is actively reviewing your business for one reason or another. More often than not, it's when you go to a bank to get a loan. It could be if you're going through a fellowship application. I know Finovation Lab, I think it's, Lunar Startups has their accelerator application, and Beta also, I believe, has their accelerator application open. This is actually, now let's understand what's in your business. Let's kind of get a look under the hood, so to speak, of what is the business. It's a deeper assessment around who's running the business, what's the expertise behind the business. You might be interviewed, but definitely you will know that you're going through the due diligence process. You've been informed, hey, we're going to be looking at your business. We want to understand your business better, and it won't necessarily be behind the scenes. It'll be you will be actively participating in the process. You will know that the process is going on, but they will be asking you for different kinds of documentation or questions about where do you think the business is going? How big is the market? A lot of the questions that will be in your business plan will come up in the due diligence process. This step in the due diligence process can take about 30 to 180 days. It depends on what the purpose is. So let's say you're working with Neighborhood Development Corporation, NDC, or maybe it's African Development Corporation or the Asian Economic Development Association on getting a loan or getting a grant or redeveloping your property. You will go through a more formal business due diligence process with them. Finally, the third step is legal due diligence. And it's just what it sounds like. Lawyers start to get involved. So once you've gone through business due diligence with the organization that you're going to be working with, whether it's a bank, a community development financial institution, a private investor, or maybe even your family, you might go through a business due diligence if you have some family members that might be investing in your business. Then it needs to go to legal. So once you all figure out, okay, we're going to have an exchange of financial or non-financial and financial exchange, whether it be a loan, whether it be a grant, whether it be some other kind of financial instrument, maybe it's an equity ownership in your company. But now lawyers get involved of like, okay, we've agreed that this will be the exchange. I will give you this and you're going to give me that. Lawyers will draft the deal. Both parties get an opportunity to review the deal. Accountants come in and they will do their own due diligence as far as making sure that the revenue that you say you're generating is the revenue you're actually generating. The goals that you have set as far as your projections on how you're going to grow seem reasonable and rational. This process can take up to about 90 days. But once again, this is hyper formalized, it's hyper systematized. For those of you who've bought a car or bought a home, that part when you're sitting in the finance office or you're working with your mortgage broker, this is very similar process of just really kicking the tires and understanding what are the numbers behind the business, what's the growth potential of the business, and making sure that you have, if it's a loan, the ability to pay back. If it's an equity stake, that there's actually something that's of value to have equity in. So those are the 3 steps of the due diligence process. Now we're going to actually go into what is the due diligence checklist. And I have about 6 components with lots of parts underneath that, right? And so one of the things that I tell people is the due diligence process is not something you wait until you're going through a due diligence process. If you can start to build in understanding and paying attention to these things while you're running the business, it will make any due diligence process all the more easier to go through. It'll be a lot less painless. If you start to just implement some of these things, in the business on a regular basis. Build it into your operations. So when you get ready to go through any sort of due diligence process, whether it's for a bank loan, a CDFI loan, a private investor, a friends and family investment, you've kind of gotten most of this stuff done. It will make it far less painless, I promise you. So the first part of the checklist is under the category of operations. Under operations, what is your actual legal name of your organization? What is the structure of your organization? Is it and when we talk about structure, we're talking about two things. We're talking about your tax identification, meaning are you a for-profit? Are you a nonprofit? If you're a for-profit, are you an LLC? Are you an S Corp? Are you a C Corp? Are you a benefit corporation? What is your actual tax structure? But the other part of it is, what is the organizational structure? What does your org chart look like? Who is in place and where are the gaps? Making sure that you have filed for your employer identification number, or what's commonly called as an EIN number or FEIN number. As you may have experienced with the rollout of the COVID relief, many people were not qualified to take any advantage of the COVID relief because they were not registered businesses, and registered businesses with a tax identification number. So yes, it's a way for the government to track you. However, when these government programs become available, more often than not, they're going to require that you have an EIN number. And so as part of the due diligence process, the bank or the investor is going to check, do you actually have a tax ID number? Because they want to make sure that there's a level of legitimacy to the business. Making sure that you have identification. Once again, if you went through the PPP process, as we did, you were asked for the front and back of your driver's license. You don't necessarily have to have a driver's license, but you will need some ID to prove your personhood. There's a lot of different reasons for that, particularly after 9/11. So that is one of the reasons, and a lot of that is baked into, a lot of the government support is baked in this requirement into the legislation. So while it may or may not be equitable, it is what it is. This is something that you will be asked for if you go through any sort of government funded money. And that could even be with a CDFI or a bank. If a bank is using money from a government program to fund your business, they will ask you for your identification. They'll want to understand who are all the owners? Who else do you owe, right? So if you have an equity piece, if your aunt is giving you $5,000 and she's asked for 1% ownership of your business, anybody who's giving you money is going to want to know that. They're going to want to know who else owns the pieces of the company. And then do you have articles of incorporation? Another component that the PPP documentation that was required was that you had articles of incorporation. It's not just about registering your business, but that you have some legitimate structure to the business, bylaws, as well as any operating agreements, particularly if you have a partnership. They'll want to know what is the mutual understanding of who's responsible for what in the business. The next bucket of due diligence is having to do with your finances, or the financial piece of it. And yes, like we talked about, there'll be a financial due diligence. That once again, this is all about you starting to institutionalize some of these into how you run your business, because once again, it'll just make it so much easier, because people are going to ask you for all of these documents and you want to be able to spit them out. It'll be a lot less heartache, a lot less late nights of you trying to figure out how to get what people want. And a lot of times, particularly with financial documents, if you're using Harvest or QuickBooks or Bench, which are common financial management tools for small businesses, these are baked in, right? So getting familiar with these tools will be really helpful. So some of the things that they'll ask you for is a profit and loss statement. And the profit and loss statement is basically an accounting of how you're doing. How did you do for a certain period of time? How did you do last year? What were your expenses like? What was the revenue like? And so that they can see, like, how are you tracking as far as growing the business, and what does it look like, right? Are we seeing that, hey, your profit margin is 20%? And a thing that really gets lost sometimes with small businesses is revenue versus profit. Those are not the same thing. What you do in revenue, you could bring in $100,000 of revenue, But if you have $90,000 of expenses, your profit is only the 10%. And that profit still may not account for taxes. You still may need to have to take out your taxes as far as like where your financial position is. So these are things that people look at is the profit actually real, or is this profit after taxes really, is your profit after taxes like now 5,000? So now you have a very much smaller profit margin than you had if we were looking at and you had a $10,000 profit. They want to look at your payroll. You may not have any employees, but that's also important to know, because what they're looking at is if you don't have the employees now and your profit margin is 10% of everything that you make, can you afford to hire more employees? And that will determine whether or not you're able to pay back the money. So these are the questions or the scenarios that they're running through their head as part of that due diligence process to understand how is your business positioned to get their money. They might ask you for bank statements. They might ask you for the last 12 months of bank statements. They might ask you for the last 6 months of bank statements. They might ask you for the last 3 months of bank statements. But having a system, making sure that your bank provides you with electronic statements automatically will be a huge thing. If you don't get automatic bank statements right now, that would be my call to action for you to do tomorrow. That is a priority. Make sure you're setting up your automatic bank statements to be sent to you, and that you are downloading them and putting them somewhere in some kind of digital management system, because consistently as your business grows, you will be asked for bank statements for a variety of reasons. So getting into the habit of downloading those, putting them in a certain place where you know you can access them really easily and quickly, that will be a bonus to you. Your 940s and 941s, this is a big question that I get from entrepreneurs. They're like, what's a 940? What's the 941? The 940 and the 941, the 940 is your, I believe it's your annual taxes. It's like a mini kind of tax return. And then your 941 is your quarterly payments that you've been making. So when you have a business that's registered, you're going to have to submit quarterly payments to the IRS in advance for your taxes. When you're an individual, you pay them at the end, at the following year, right? So you might be paying taxes for last year's income. When you have a business, you are paying your taxes before they've even been incurred, right? You're paying them quarterly. Then at the end of the year, the IRS will reconcile those and be like, oh, you paid too much, we're going to issue you a check, or you paid too little, where you need to pay us more money. They're going to look at your trailing revenue for the past 12 months. So you might be asked for an income statement. Once again, if you're using a management system like a QuickBooks or a Bench or a Harvest is very common for solopreneurs. The income statement says, oh, you're taking income on a quarterly basis, but your expenses are running on a monthly basis. So it's just for them to understand what is the wave of your income, how does it look like over the course of a year. If you're a ice cream if you're an ice cream maker, your revenue might be concentrated for between April and September, right? As opposed to if you're a hairstylist, you're making income all year round, or maybe you take off. I hope you do. but if you're taking off in certain times of the year, are you making enough income to make up for those times when you're taking off, right? You'll be asked for your personal tax returns, particularly if you're an LLC or a solopreneur. Your taxes are baked in. The business's taxes are baked into your personal taxes. So they're definitely going to ask you for your personal tax returns. So if you don't have a management system for that, if you're using Intuit, once again, or QuickBooks, they store those automatically. But if you're using some other kind of system, make sure that you are downloading anything that you file and that you're keeping a copy of that. So when the time comes and you're asked for those documents, you can quickly access them and provide them. I'm a big digital person, so I title my documents. I'll say 2020 federal tax return. So then that way, when I look for something, I can literally go into my finder and I can do like 2020 taxes, and it'll bring up everything related to that. It has any of that label on there. If somebody's asking me for it, I can just forward it on to them, and now I'm done. I'm not sifting through a whole bunch of papers trying to find where was that tax return. And then in a W-3 or W-9s, they might ask you for these other things. The next one is about legal. Once again, we talked a little bit about legal structure. So it'll come up here as well, particularly when you go through legal due diligence. Your investors are going to want to know what is your current setup, not only for tax purposes, but there are different responsibilities for your entity, both federal and at the state level, depending on what your structure legal restrictions on what kind of money you can take in and how you can take in that money. And so that's why it's important for them to know what your legal structure is. Again, you'll be asked for articles of incorporation. You might be asked for bylaws, corporate bylaws, particularly if you're an S Corp or a C Corp. What your operating agreement, once again, I always tell people, especially if they have a partner, I don't care if it's your life partner, I don't care if it's a relative, your sister, your brother, your uncle, write down who's responsible for what. It never is a problem until it's a problem. And anybody who's investing money in you, they're going to want to know that that stuff has been worked through. And my thing is, do it while you like each other, as opposed to trying to figure it out when you don't like each other anymore, right? And then what's the contingency plan? So contingency, I like to say, if you hit the lottery and move to Bora Bora, what happens to the business? Who takes over? Who's in charge? Right? If there's a help, we've just been dealing with COVID. I'm recovering from COVID, but if I was hospitalized, there's a contingency plan that's written down of like who manages the company in my absence if I'm incapacitated, right? The next bundle is communications, right? So who is the point of contact? What's the best way to contact you? Don't wait until a crisis happens to start building relationships, right? So a lot of times, and working with entrepreneurs, we see this a lot. They get a big order in. We just had an entrepreneur we're working with. They got a big order in from Target, and they're like, okay, now we need to get like $50,000 so we can actually match the production that Target's asking for. And now they're running around to go to banks to try to get this money. Well, no bank works under the gun. I can just promise you, it's a hard no. If you're coming to them under the gun, that is an indication of how you run your business, and they don't want any parts of that. So this company, they ended up, this is someplace that they bank. This is their actual bank, but they didn't build a relationship. And I know for us, for folks of color, having been left out of the financial system, systematically left out of the financial system, that doesn't feel very intuitive, nor does it feel like it's worthwhile. But I can promise you, and you may have heard horror stories from the whole PPP situation, the people who got into, who were able to get through the PPP program, particularly that first and second tranche of money, was because they had a relationship with a bank. Right? And what a relationship with the bank, it means, there's a couple of different ways. There's no silver bullet to this, but my recommendation is that you are visiting the bank manager, the bank BP, probably once a quarter. If not once a quarter, at least once every 6 months. And at that meeting, it can be, hey, I just want to go over my finance with you. I want to tell you all the great things that have happened in our business. It can be a 20-minute coffee. It can be 20 minutes in the bank. You don't even have to meet with them. It can be a virtual meeting, but that you're sharing with them how the business is doing, how the business is growing. And some of the banks, especially with the community banks, they can kind of serve as a CFO, like a strategist, to help you think through, oh, you know what, how are you accounting for this? Oh, it looks like this could be an issue as far as how you're growing. Here's some things you might want to think about. Leverage those relationships because they'll be really, really helpful, especially if you can't afford to have a CFO, like many of us. A six-figure salary is not necessarily in our wheelhouse, but if you start to build a relationship with your banker, and like when I say banker, I mean like the manager, the person who's ahead of the loan department, the person who's ahead of community partnerships or liaison, or the president. Obviously, in a Wells Fargo, that's not necessarily easy, but if you can talk with the branch manager. That would be the equivalent. In a community bank, there's usually somebody who's responsible for small business. Like that's their whole job, is to work with small businesses. So reaching out to that person. There's a lot of great folks, particularly the folks at Drink Bank. They're a commercial bank. They're specifically for businesses. They're not necessarily a commercial bank where they're dealing with individuals. All their work is with with businesses. So you could reach out. I believe the gentleman's name is Scott over there. I know Greg, the president, he takes meetings. Really, that's how you start to build a relationship. And the same thing with a CPA. You may not be able to afford a CPA, but you'll be like, hey, my goal is to hire you eventually when I get to a certain point. Can I get 20 minutes of your time to like look at my profit and loss statement to see what are things that I could be thinking about to get to a place where I can afford to bring you on, right? People are generally very helpful. And anybody who's not, that's not somebody you want to work with anyway. So remember, people want to be helpful, ask for help. I would say 80% of the time, people are going to respond positively, but don't let the 20% that people respond negatively to color your efforts to continue reaching out and building those relationships. The next bucket is marketing. So as part of the due diligence process, your investor, and I'm just going to call all of the buckets of money an investor, they're going to want to know, who's your customer base? So I'll give you an example. I had an entrepreneur come to me and she's a Haitian American, and she wanted to launch an e-commerce business that was all about providing Haitian American based products for Haitian Americans living in the United States. So I said, okay, let's play that tape all the way through. First of all, let's understand how big is your market, right? And the reason why she was doing this, let me take a step back. The reason why she was doing it, she's like, as a Haitian American living here in the United States, what I hear oftentimes from other Haitian Americans is that they miss home, they get homesick, and they would love things that remind them of home while they're living here in the United States. And I said, okay, from a market standpoint, from a business development standpoint, how big is that market? Right? So I asked her, I said, well, how many Haitian Americans are even in the United States? Because I don't know. But like, let's understand how big is the market. She's like, I don't know. I'm like, wrong answer. That is something, I don't care if this is your first business or your 10th business, you should know how big your market is, right? You should know how big the number of people you are trying to reach is. So I said, okay, let's go ask Google. So I put in, literally while we were on the call, I said, how many Haitian Americans are in United States? And the number came up, and it's about 800,000 to 1 million. So that's obviously, you can't reach all of those customers. You're going to reach a subset of those customers. You don't have, not only do you have a small market pool, 1 million people is not a big market pool for you to sustain a business. But when you think about, you're only going to get a portion of that business, let's say 10%, you're now talking about 100,000 people. That is your customer base, is 100,000 people. Is 100,000 people enough of a customer base to build a whole entire business on? And the answer is no. You need a lot more customers. You need or if 100,000 people are going to be your customer, then you are clearly wanting to be like Maserati, meaning that you sell one unit like a month, right? And that unit is like $250,000. That's when you can have a customer base that is that small. So really, under the investor is going to be looking at, if I were to give this entrepreneur money, I would say absolutely not. You don't have a big enough customer base. But what I said to her was, you might want to shift your thinking about your customer base to be, you want to reach people who are really interested in having a representation of island life. Now your customer base has now become much bigger than people who are just Haitian American. It's anybody who's ever gone to Haiti. It's anybody who ever dreams of going to Haiti, or some kind of island, right? Because what she was selling resort wear, she was selling gift items, she was selling all these things. I'm like, so people who maybe went to Haiti and want to have some kind of token to remember, people who are into resort, they live in resort towns and they want some resort wear, like, broaden your customer base so that you're setting up the business to actually thrive and grow. But these are some of the things that an investor will look at to see how viable investing in you is for them. What's your value proposition? What's the sales rep? How long does it take for you to bring on a customer, right? A service-based business is a very different sales on-ramp than maybe somebody who's doing e-commerce. But the investor is going to want to know, what is that time horizon? How long does it take you to convert a customer? And what's the lifelong value of that customer? So if you've been in business for 4 or 5 years and 20% of your customers are repeat customers and they buy from you, maybe the frequency that they buy from you is once a month, these are the kinds of things that an investor will be looking at. What is your value proposition? How are you different from everybody else who's selling, in this particular case, Haitian wear? Right? Do you have some kind of spin? Do you have a social element? Are you working with artisans that are from the island? Like, what is your unique value proposition and how distinct is that from everyone else in the field? Also, they'll look at your brand. They'll be like, do you have a brand? Or is your brand kind of fuzzy? Do people, I don't know if you've seen a commercial and you're like, I don't even know what the product was, right? You're like, that was a great commercial, but I can't even remember what the product was. Okay, well, the creative was amazing. The brand is not, right? So some of the things, and this is another reason why I'm saying, think about these things as part of running the business, as opposed to waiting to deal with these things while you're in the due diligence process. It is just nerve-wracking to try to do both. But if you start to think about these as operationalize these into the business, I hope that you're starting to see where you might be able to understand the connection of, I'm working on this on a regular basis and looking at these things or paying attention to these things on a regular basis, instead of waiting to the last minute and trying to scramble, because you'll just run yourself ragged and pull your hair out. And then the last component, let's see how we're doing on time. Okay, we're doing great. The last component are what I like to call intangibles. These are things that don't necessarily have a monetary value. These are things that don't necessarily aren't necessarily connected to your profit and loss statement, but they are things that an investor may look at. So once again, we talked about value proposition. We'll talk about realignment of the business. So a perfect example of that is Netflix. Some of you may not be old enough to remember, but Netflix was not always a streaming company. They first started off as being an alternative to a company that is now defunct called Blockbuster. You used to have to go into a building to go rent videotapes to watch a movie. That was the alternative to watching movies on television or going to the theater. And so Netflix came out with a mail service where you could either go to a kiosk at a Walgreens or a CVS, and then they expanded to mailing you the CDs and games, and you could just order online, to now becoming this content creation company that they are right now. So part of it, the due diligence process is, if something happens like a COVID, do you kind of have a plan to deal with that? Right? Reimagineering or realigning the business in case of different kinds of contingencies. If you're a surf shop in California on Venice Beach, what is your alternative if there's a tsunami? What is your, have you thought about what are the things that you need to readjust if different external forces or internal forces, like we talked about before, there's an untimely sickness, there's an untimely incapacitation of the owner or owners of the company. How will you deal with that? Will your product be relevant 5 years from now, right? So when we think about Netflix, I don't think any 5-year period, they've been the same company. I think for every 5-year period, they've had to reinvent the company, which has been amazing. They've had some great leadership that's been able to shepherd them through that. I think that is the quintessential case study for understanding how a business needs to continuously evolve, no matter what your size or scale is. I don't care if you're a small business here on the main streets of the Midway community, or if you are trying to be an aspirational, big company. Understanding what is the timing of your business in the future. Is your product going to be meaningful and relevant? Or do you need to start thinking about shifting and adjusting your product now, or your services now, for the world that is coming, right? Particularly like in this COVID world, there are going to be some people who aren't going to go back to shopping in a store. They've now been forced to shop online. That is now how they're going to shop for everything now. So as a business owner, are you facilitating that customer behavior change, right? Partnerships, once again, we've talked about this already. Partnerships, making sure that your partnerships are documented. I had two ladies who were really good friends. They were living together. They had gone through divorce, not to each other, but to other partners together. And so when I met with them, I said, okay, where's your partnership agreement? They're like, oh, we don't have one. You know, we've been through so much together. I'm like, I don't care who it is. I don't care if it's your child. I don't care if it's your dog. You need, even if that partnership agreement is just on a piece of paper saying, this is how much you own. This is what you're responsible for. This is how much I own. And this is what I'm responsible for. I don't care if it's on a napkin. It is binding if it is written down, right? I don't suggest writing it on a napkin, but it doesn't also have to be something where you have to hire a super, super smart law firm to do this for you. You can write something down, and as you advance and get more money, or through the Elevate program, you can get a lawyer that can formalize whatever you and your partner have put down on paper, or partners. They're also going to be asking for skeletons. And let me tell you, and I love the questions coming in, keep the questions coming in. We're going to stop in just a moment to be able to address those questions. Particularly for people of color, this can be especially triggering, so I want to honor that. When you are working with somebody who wants to invest in you, the dirty laundry always comes out. It always comes out. It always comes out. It's best to, with caution, air your dirty laundry or skeletons. So I'll give you an example. If you did an under the table deal with your uncle for a piece of the company because they really helped you out of a jam, right? That will come out, because once you start getting money, your uncle's going to be standing at the front of the line. Right? And they're going to be, that uncle might call this company and be like, you know what, we had an agreement to such and such and such and such and such and such, right? The investor is going to be really frustrated, if not pull out, because that information wasn't disclosed. Or maybe you didn't secure all of your intellectual property or patent from the person you acquired the technology from, and that needs to be cleaned up. So if it's a situation like that, let them know, because one, they can maybe help you, right? Get out of that situation. Like, hey, you know what? I acquired this patent. There was no formal paperwork on this patent, but it was gifted to me. I have no paperwork on that. Just want to let you know. So what the investor might do is like, okay, before we can go forward to this deal, let's try to get something in writing from the person who gave you the patent. Hopefully that person's still alive, to be able to at least get that written on paper that you are the owner of that patent, so that it doesn't impede anything on the future. Like, somebody can't come back, one of their heirs or their family members can come back and say, like, you owe us some money because that patent actually belonged to my papa, right? So let them know. But also, just like, once again, is your product or service the right place in the right time? So these are just the buckets, and I'm going to be providing with you, I'm providing for you, I think, on the next thing. Let me see. I think I have here, I made a link here. Let me see where I found it. Nope. I have a link to a worksheet that I will provide to you all. I will make sure Christine gets and shares with you all that lists all of these out, as well as some very specific questions to the due diligence checklist. So there is a handout. I'll make sure that you have that handout. But at this time, I want to open it up for Q&A. So let me see. I think I can see these questions here. Oh, yes, I can see some of the questions. How important is your personal credit rating when applying for a first-time small business loan? What activities can I do to establish great credit? That is a great question. So I will say this. First of all, the answer to that question is contingent on where you're getting the money from. And the reason why I say that is, if you're going to a community development financial institution, they may not necessarily require that your personal credit be in the best shape. They may even have a program that might help you through that process. So once again, start early. So if you're just having a inkling of a thought that you may want some loans or some other financial support, and you're thinking about working with an organization, a community development financial institution, or a bank, start now by asking them, what do they require? I know some of our CDFIs, our community development financial institutions, require a credit score of 580. Okay, Now that you know that, now you can look at your credit and understand what are the things that you can do to pay that off. And they may even have a program that you can go through to clean up your credit to be able to qualify for their loan. All of these things take time. And this is why I can't stress enough that you should start as soon as possible. Maybe what I'd like to tell entrepreneurs is carve out 30 minutes a month to do something related to this activity, right? Just 30 minutes, put it on the calendar, whether it's addressing your personal credit, whether it's reaching out to a banker, whether tackling anything that's on this list, devote 30 minutes a month to this. Once again, that's a practice of building these operationalizing these things in the business instead of waiting when you're in crisis and you need them. The second part of Victor's questions of like, what activities can you do to establish great credit? One is you probably get these things in the mail and you're like, this is stupid. I don't know why I'm getting this. But Dun & Bradstreet, it's an organization, for lack of a better term, they're like the business FICO, right? It's where people will go to check out to see the credit viability of your business. It's free to get a Dun & Bradstreet number. Sometimes for some of these loan applications, they will require a Dun & Bradstreet number. You don't need to know what Dun & Bradstreet means. It's just the name of two guys. What you need to know is that that's where people look to this organization to see your credit worthiness as a business. But the other thing that I will say is like, pay your stuff on time. The best way for you to build up your personal and your business credit, pay it on time. Pay on time. Pay on time, pay on time, pay on time. If you can't pay on time, communicate that. Do not slink away and just like disappear. Face it head on. I know it's really uncomfortable, particularly for people of color. Face it head on. Reach out to your creditor. Say, hey, this is a situation. I know I owe you $1,000. I can't do that. What I can do is I can pay you $20 a month until this is paid off. Come with them with a plan, even as ridiculous as the plan may be. If that's what you can pay, say that and stand firm in that. Like, hey, I want to resolve this credit issue with you. This is what I can do. Take it or leave it, right? But there's also lots of credit counseling places around town. Many of the economic development, like Latino economic development, Asian economic development, I believe African Development Corporation, they have some free services. I think there's also Lutheran Services has a credit. Prosper, Prepare and Prosper, they have a credit improvement program. But the big thing is pay your bills on time. Pay your bills on time. If you can't, communicate to your creditor what's going on and when you will pay them, and that will go a long way. Character is a big thing. It's a big thing. It's a big, huge thing, right? So even if you don't have credit, your credit worthiness can be based on your relationship. If you can say, hey, I have 5 vendors that can tell you that I pay my bills on time. These are all the vendors that I work with. Call them and they can tell you how I am on making payments. So thank you. That was a great question. Let me see. Are there any other questions that have come through? Or Christine, do you have a question?
It doesn't look like there's any other questions in the chat right now. As I was listening to the due diligence list, you mentioned different points in time where not having something would be a snag. If you look at the whole kind of course and process, what would you say are the 2 spots that could just totally derail what you're after?
Yeah, let's see here. I would say the 2 biggest things that I see, particularly for Black and Brown founders, is really around legal structure and their tax ID number. And I'm going to loop those kind of in the same thing. The other piece of it is understanding your numbers. And we do a workshop on know your numbers. I think for us as people of color, we're so on the grind and we're such good hustlers that we're like, oh, I'm just going to keep going and keep going and keep going, and not really understanding the relationship of our input and our outputs, right? So understanding like, and I think, and I'll just give you a personal story, right, of how that can show up in a business. So when I first started my business, about 6 months into the business, I was like, I can't keep doing all this stuff. Like I can't keep doing all this stuff, but I wasn't making a lot of revenue that I could hire a whole human, right? But I'm like, I need to find some kind of help, because if I don't, I like this business isn't going to make it, right? So what I did was I went through the process of like, okay, let me look at what I can, let me see what I can do. Let me reframe this. What can I do? So after looking at my numbers and looking at kind of what was going to be coming in the upcoming months, I realized that I had a very small pool of money. When I say small pool, I had $2,000. I said, I have $2,000. This is an amount of money that I'm going to dedicate to getting some help. And so then I went through the process. So once I dedicated a certain allotment, a budget for that, I then went to the process of like understanding what position would fundamentally give me more time back in my day, right? What positions would have exponential impact? And so when I went through that exercise, I realized there were 3 positions that could fundamentally shift how I operated the business. 1 was to hire a project manager. 2 was to hire a social media person, a part-time social media person, or a part-time project manager. The 3rd was I was launching a podcast. And so I'm like, I need a part-time associate producer for the podcast. So now I've got a budget. I know what I need. I went and I created job descriptions for each one of those roles. And I wrote out what would their job look like on a day-to-day basis, right? So once I did that, I happened to be at an event. I'm talking to this woman who's the caterer. Her sister happened to be helping her with the catering. As I was talking to the caterer, she had to go off and start doing her catering thing. So I'm talking to her sister and I was like, oh, so what keeps you busy during the day? What do she's like, oh, I'm a project manager. My heart like leaped out of my chest. I was like, oh my God, I just wrote this job description for a program manager. Could this be fate, right? So I started asking her more about like, well, tell me more about like, what do you do when you're project manager? Da, 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 da. And then I said, well, would you like to go to lunch? And she said, yes. Took her to lunch. Talked to her more about her background, what she was looking for, what she was interested in. And then I said to her, I liked what I heard. So I said, I have a position. It's a part-time project manager role. What is your rate? And so she told me what her rate was. And I said, well, here's the deal. I could hire you for 1 month at 20 hours a week for your rate. I said, or if you're willing to take a lesser rate, I can keep you on for 2 months. And the incentive for keeping you on for 2 months is because I have a couple of deals that I'm closing. And if I can close these deals, then I can potentially hire you and keep you on longer. And so she was like, huh. So she's like, well, let me think about that. She came back to me a couple of days later. She said, I will take the lower amount and work for you longer. That was pivotal in my business. That person ended up staying with me for 3 years. And so this is what I mean by understanding what your numbers are and understanding where your money is coming from, how much does it cost you to deliver on a particular product or service. Understanding that is so important because then it allows you to make some of these decisions. But knowing this is really going to be, you're going to be able to answer the questions that the due diligence process is going to be taking you through. So once again, it's really this understanding of like, if I make cookies, how much does it cost me to make a batch, right? If your batch is 100 cookies, how much does it cost you to make that batch? What's the flour? What's the sugar? What's the milk or whatever the ingredients you use? Maybe you're vegan. What does it cost to make you that batch? And then breaking it down per unit. But one thing that people forget is like, oh, well, but I put the cookies in a little plastic baggie and they don't count how much the plastic baggie cost them. They don't count what the gas it takes them to drive to drop it off at all the different locations that are buying from them, right? So you got to kind of go a little bit deeper to really understand, and it's not going to be perfect, right? This is not to be able to become an accountant or become a fiscal accountant or anything like that. But if you can get within like 90% of what the cost is, that's better than being at zero, which is where a lot of entrepreneurs are. They have zero idea of how much it costs them. They have zero idea of how much time it takes. And they don't really understand that their time also has value, right? And that's really important to understand so that you know when you hire somebody, what are you hiring them for? If it takes you 5 hours to do the batch of cookies on your own, how can that be reduced by adding somebody? And sometimes we convince ourselves that I don't have enough money to hire somebody, but they don't realize that they can't afford not to hire somebody. because they really need to be thinking about other things and delegate some of these tasks so that they can concentrate on the thing that they're best good at. So I know that was a long-winded answer, but it's so important. Yeah, if you've got any other questions. Okay, so Victor's got another question. What are best practices in keeping my business and personal finances separate? Huh, I love this. First of all, keep them separate. That's the first thing, right? I think a lot of entrepreneurs are like, oh, it doesn't really matter. It 100% matters, not only in the due diligence process, but in the growth and sustainability and health of your business. So a couple of different ways. One, start with a different bank account, right? And I would even say be at a different bank, right? So part of that practice of if you have a different bank that you're banking at for your business versus your personal, there's a couple of reasons for that. I talked a little bit earlier about Drake Bank as a commercial bank. A commercial bank has very different services that it offers than a commercial than a bank that's what we call retail, right? For individual, for people, you know, us regulars, right? So there'll be a different mindset when you go to the bank. There's a different mindset when you interact with a bank, understanding that this account, this checking account is for business, right? You're going to come to the conversation in a very different way than if you were just going to your regular bank, your Wells Fargo. But once again, maybe that's not always easy. I would encourage you, particularly if it's a business, go with a credit union or a community bank. Once again, those are places that tend to be more relational. They want to know who you are. They want to sit down and meet with you. They want to engage with you. They want to hear about your business, as opposed to maybe one of the bigger banks where they don't necessarily have time to do that, right? And smaller community banks, they prioritize that relationship building piece of it. Your personal finances, you know, put yourself on a household budget. Understand, like, this whole thing about finance is definitely something that we need to do in general. So even understanding what are you spending your money on? You know, I remember when I was working with one entrepreneur, I called her out for, you know, she's getting $1,000 weaves. I said, so what could you do? How could you grow your business if you stop getting a weave and put that $1,000 every month into your business, right? So it's really thinking about reprioritizing your financial life to align with the goals of your business life, right? Even though you are separating your personal and your business finances, obviously your personal goals should not be hindering and upsetting your business goals, right? So once again, I want to be clear. I'm not saying that you should take your personal finances and put that in the business, although you can. But once again, you should be tracking that. If you are now taking the $1,000 that you spend on your weave every month into your business, that is equity that you're putting into the business, and that needs to be documented in your accounting system. So let's say you put $12,000, because $1,000 a month over the course of a year is $12,000. You inject that money into your business, you need to account for that. And the reason, one of the biggest reasons you want to have account for that is your ownership stake in the company. If you're not counting that, then when you go through the due diligence process and you're working with an investor, particularly as it relates to equity and ownership of the company, you are selling yourself short on how much you've invested in the business, into the company. So, you know, there's lots of just practical reasons. I think, you know, some other best practices, I would sit down and have a different day of the week or month that you review your personal finances that's different than the day that you go over your business finances. But you should have a day that you are working on those things. For me, I work on it every Sunday. In my personal life, my partner and I, we sit down because we have goals. We have a goal setting conversation. So we're sitting down and we're talking about our financial situation on a weekly basis. It's not a deep, long conversation, but it's a conversation to keep us actively engaged because we have some financial goals that we're trying to attain. So it's a good check-in point for us. Now, and then when I do it for my business, I have a meeting with my accountant. We're sitting down and we're talking about what's going on with the business, what are ways that we can improve, things like that. So designating a day to work on your financial, both personal and business, making them different days, not the same, so you don't loop the conversation in. Having separate bank accounts, and even better, a separate bank, particularly for a business account, keeping a credit union or a commercial bank. There's so many different things you can do, but those would probably be the two big things that I would recommend because they're just doable. I hope I answered your question, Victor. So
I think that was just great. Oh, Victor says yes.
Awesome.
I think we are just about at time. Do you have a couple of wrap up elements, Elaine?
I do. So I always, if you've ever been on a session with me, I always like to, I always have a call to action. And so my call to action is, and you can put this in the chat, what is one thing from the due diligence checklist that you are going to work on over the next 90 days? And you can put it in the chat. What's something that you're going to be working on? Oopsies. Oops. There we go. I'm trying to move this here. Yeah, okay. And like I said, I will make sure that you all get that checklist, that handout that goes with this session. But what's one thing, drop it in the chat. What are you going to do to, what's one thing that we talked about today that you're going to work on? Maybe some folks are having trouble getting to the chat feature.
Or they're just being quiet and shy.
Yeah, being quiet. Well, that's okay. I really hope this was helpful, that you now have at least a better idea of the due diligence process, what is expected of you, what kind of questions you'll be asked. Definitely stay connected with us, follow us on social media. We're on all the channels. Would love to hear from you, would love to promote your business. So let us know. If you're trying to get a hold of us, that's my email address. If you want to connect with our ConnectUp team, definitely reach out to Michelle, and that's her email address. I want to thank the Elevate Network and Christine for having me. I always enjoy these. They're always great. It's a great reminder for me when I do these of like things that I need to be doing. So really appreciate it. I appreciate that. And thank you so much. It was really, really great to be here. And thank you so much for your time.
Well, thank you, Elaine. We appreciate it. And a lot of the resources that Elaine mentioned throughout her conversation today are available on Elevate Business HC. You know, one of the components of the program is for businesses in Hennepin County to have access to 20-25 hours of professional services and advice. So please go ahead and access those services. You can see the website here. There's a lot of great professionals that can provide a lot of assistance and help you walk through your due diligence process. I think with that, we'll wrap things up. Elaine, thanks again. And thank all of you for spending time with us. Bye-bye.
Thank you. Have a good weekend. Have a good week. Stay healthy and happy.
Bye-bye.